Welcome to ETM Analytics' first take of the markets. As per usual, I'm joined by Director George Klenos. George, do you think the DA understands the moral of the story of the boy that cried wolf? Because broadly speaking, this has now been the third attempt. First was they had these veiled threats about the GNU with all the legislative pieces, the NHI, the Exprop, the Bella Act. Then there were some veiled threats when we looked at the budget, and now it was this firing of the deputy minister. And they make this big hoo-ha to come out on Saturday to say that they are pulling out of the national dialogue, which, by the way, no one is taking very seriously outside the perimeters of Parliament. Okay, it just felt like a damn squib. And I just want to make this clear: I'm not advocating for the dissolvement of the GNU, but just get it together. But what's your feelings towards the politicians this morning, George? Because I know it's one of your favorite topics.
Yeah, you know what I think of politicians more generally, but let's not go there. Yeah, I mean, much ado about nothing, right? And I don't think the DA does themselves any favors when they go down this road. However, what they have done is they have highlighted a potential problem, and I suspect what will happen because we do have quite a dogged media. I wouldn't be surprised if the media starts digging into this a little bit more, because the whole timing of this felt peculiar to me. Just ahead of what could have been quite an important vote, I found that it was a peculiar timing, and I think there's more to the story than we can see at face value. I don't think it's about the trip that Ramaphosa didn't agree to. I don't know that it's. I think there was something more behind the scenes, and from what from the people that I've spoken to in the market, they're starting to feel the same. They're just thinking it was odd timing. It was a peculiar event, but the one thing that the DA has highlighted is an element of hypocrisy, which I think exists within government, and Ramaphosa needs to be aware of it. But over and above that, I don't mind. Maybe this was a bit of an embarrassment for the DA, but I don't really mind political parties highlighting each other's failings, and I don't mind them highlighting things that they believe aren't right. It's called accountability. We might not like what it looks like, and it might be a boy cried wolf and cause angst and concern within markets and investors and all of that sort of stuff. But if the media gets hold of this and starts digging and does find something more, it's going to put a whole different perspective on what happened. And again, that goes back to the whole element of accountability. And that's what this GNU has brought. It has highlighted and at least shone the spotlight on things that would never have otherwise gotten any airtime whatsoever historically. So, let's not be too critical of these events. I think it's a messy coalition, as most coalitions are. There's always this one-upmanship where one is trying to prove to the world that the other is the problem, and the real issues sit with the other party, not with themselves. But that aside, if we can look through that and understand rather that this is a coalition, an uncomfortable coalition that is going to point out each other's failings, then I don't necessarily see that as all bad news over the long term.
No, look, it's an uncomfortable marriage of convenience, right? And when we spoke about it on Friday or on Saturday, you have to question, it feels almost like this firing of the deputy minister is a very insignificant thing to risk the longevity of the GNU. And I don't see Ramaphosa taking that risk for something so insignificant or seemingly insignificant. So I agree with you. It just feels that there must be more to it. However, both Ramaphosa and John Steenhuisen, the DA and the ANC, both understand that it's better for them to be together in the GNU than being outside of it. So, but there are questions. Why risk the longevity of the GNU for something seemingly not that major, especially, when you compare it to some of the other failings happening with our cabinet ministers. But from South Africa, quickly to one of our trading partners, we know that there was some data that came out again last week. George, you and myself spoke. I forgot about, I think it was earlier this year or end of last year, where we started seeing these red flags going up for China, going into this deflationary trend that they're going to struggle to come out of. It feels to me that there are growing concerns, and perhaps in Beijing a realization of a massive problem that it could soon face.
Yeah, I mean, this is typically what happens when you get a negative credit cycle, and their money supply growth is very, very weak at the moment. And when you're an economy that has relied so heavily on the accumulation of debt to drive your GDP growth, all of a sudden, when that money supply growth and that credit cycle isn't there, you get shown up for the deficiencies that actually exist within your economy. And I think that's what's happening in China. So corporate profitability is under massive strain. We saw this morning that their manufacturing production is under a great deal of pressure. Over and above that, you've got the effects of the tariffs that are as yet somewhat unknown. So there are a lot of crosswinds that are blowing in and amongst all of that. We know that there are indications of a global slowdown. Otherwise, there wouldn't be such a coordinated effect by all the central banks, most of the central banks, save for a couple like Japan, for example, and Turkey, that are raising rates. The rest of them are all cutting, and they're cutting for a reason. And it's not just inflation. It's inflation, of course, and inflation moderating, but it's also because their economies are coming under pressure. And so, being the producer to the world, China tends to feel that global slowdown proportionately more than many other countries around the world. And I think there's a lesson in there, or there's a warning in there for South Africa, if you like, because China, after all, is one of South Africa's biggest trading partners. And so what happens there does matter to us. If whatever we export to China is going to be affected by weaker growth, especially out of China. And then if you have a look at some of the IMF's forecasts on GDP growth for China, you begin to see that they're anticipating a slowdown to, just around 3.5% to 3% growth per annum over the next couple of years. That's not good. So gone is China as the world's growth engine. It's not that anymore. In fact, it's quite muted by comparison, and it's not going to be a factor that's going to drive this huge push towards further industrialization and massive demand, et cetera, that those days are gone. So we need to now think of this world a little differently, and we need to understand that the growth dynamics the world over have shifted, and we now need to focus on least bad investment opportunities rather than always looking for the best growth environment that we can find.
Speaking of China, I see that they and the US have struck a new deal. And of course, we are keeping an eye on the US this week as Trump's big bill, the one with all the tax cuts. It's $4.5 trillion worth of tax cuts, as well as $1.2 trillion worth of spending cuts. I know the Senate is fighting it out at the moment. They're trying to pass it before the 4th of July. It's already come up against several obstacles. So we'll be keeping an eye on that, because obviously that will also hold massive implications for the US economy going forward. George, thank you very much for your time, and we will chat again next week.